I'm Luke Lango, America's #1 stock picker. And this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's #1 stock picker, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about the Tesla of China, premium EV maker NIO, ticker NIO. Now, NIO blew the doors off of 2020. Beginning the year at $4, NIO stock shot up like a rocket through year end, finishing 2020 at $50. Market down as one of the best years any stock has had in recent memory. But stocks don't go up in straight lines. After a red-hot start to 2021, NIO stock has since trended lower, losing about 10% of its value over the past 3 weeks. This recent weakness is an opportunity, and the time to buy the dip is now. The company recently provided a strong delivery update, which implies that business momentum continues to ramp. The outlook strongly implies that NIO is positioned to have another breakout year in 2021. And both the fundamentals and the technicals strongly support the thesis that NIO stock is a great buy below $60. So forget the noise and buy the dip. This stock is going to race to $100. Here's a deeper look. Now, NIO recently reported January delivery numbers, and they were nothing short of spectacular. The company delivered 7,225 vehicles last month. That is up 352% year over year, marking NIO's 10th consecutive month of triple-digit growth, and its single best year-over-year delivery growth rate in that entire stretch. By itself, that 350% plus delivery growth rate is impressive, but there's better news. January deliveries rose 3% month over month. That never happens in the auto market, right? Because you have December. December deliveries are usually enormous thanks to holiday demand as consumers rush to buy new cars for Christmas. Then deliveries almost always fall off a cliff in January as the jolly times end and holiday demand dries up. For example, NIO's January 2020 deliveries dropped 50% from December 2019. But NIO bucked this trend in 2021. NIO's sales rose from December to January. That's impressive. And it strongly speaks to the momentum underlying the business today. Zooming out, the momentum looks just as good. Trailing 12-month deliveries now stand just above 49,000, up 13% month over month and 143% year over year. All in all, it appears that NIO's business isn't just sustaining its robust 2020 momentum, but actually building on it. Things are only getting better here, and the outlook implies that things will only continue to get better, which of course implies better days ahead for NIO's stock. Now, NIO had a strong 2020, no doubt about it, but the fundamentals imply that NIO could have an even better 2021. China's auto sales struggled in the first half of 2020 thanks to the COVID-19 pandemic. They then rebounded in the second half of the year as pent-up consumer demand coupled with low interest rates. Those two drivers will remain vigorous in 2021, and for the year, China's auto sales are expected to rise 4%. EVs will be at the epicenter of this rebound in China's auto market. Thanks to government support, increasing supply, falling costs, and shifting consumer demand, China's EV market is expected to grow by an impressive 40% in 2021. That's a huge number. And guess who's at the forefront of the booming Chinese EV market? NIO. The company just launched a premium sedan, its 4th EV model. NIO also just announced a brand new battery that significantly boosts performance specs such as driving range and recharge time. Plus, the company is dramatically improving its battery swapping stations to be far more efficient with much more capacity. In other words, NIO will materially improve its business fundamentals in 2021 at the same time that China's EV market is expected to catch fire. That combination ultimately implies that NIO stock could have a better year this year than it did last year. The fundamentals and technicals underlying NIO stock strongly point to the idea that the stock is a great buy here and now below $60. On the fundamentals side, NIO has a long growth runway ahead of it as the company turns into a globally dominant supplier of premium EVs with a healthy margin profile thanks to falling battery costs and strong pricing power. Long term, I see NIO as the world's second largest EV maker, behind only Tesla. My numbers indicate that this reality makes NIO stock worth at least $60 today and likely somewhere closer to $70 based on the company's earning potential over the next decade. Indeed, based on that earnings potential, I see NIO stock racing to $100 in the foreseeable future. Meanwhile, on the technical side, NIO stock has developed a habit of consistently dipping to just above its 50-day moving average on sell-offs before bottoming out and reversing course. NIO stock today trades below 60. The 50-day moving average sits around 52. This is historically consistent with where NIO usually bottoms out during sell-offs and reverses course. I don't see this time as being any different. Thus, I think the recent chop in NIO stock is drawing to a technical close, while the fundamentals should power this stock to $100 over the next few years. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you like what you saw. If you did, please subscribe, hit the notification bell, smash that like button, follow me on Twitter, or if you like to read, come over and visit us at investorplace.com, where we have some of the market's best analysis. Until next time, cheers, and happy investing to all.